All right, StockPulse, we are on location at the Sprott Resource Symposium, and a man who needs no introduction at all, Rob McEwen from McEwen Mining. Hey, Rob, appreciate the time, as always.
Glad to be here.
Gold market, let's get right there. Good environment. Fed looks like they're setting policies to where it could be a good ride for gold. How do you kind of see the whole thing here?
I have a very positive outlook on the price of gold and silver. I think we've been in a bull market. It's more evident in gold shares than gold since the beginning of 2016. I mean, gold's up 35% since then, but the GDX, the GDXJ, reflecting the senior golds, they're up over 100%. And that's 100% better than the Dow or the S&P have done. And it just hasn't got into the broad media for people to say, now wait a minute, I thought gold was dead. But it's moving in all currencies right now, moving higher. And you've got this big base that wants to move higher.
So, and the wind looks like it's at our back here. So how do you kind of see things setting up for the near term, 2-3 year cycle?
I see the juniors are coming alive. You can look at a handful or two of them. I look at a company called Great Bear that we have an investment in. It's got a bias, but last August it was 50 cents. Today it's over $5. There are a number of other companies like that. So the illiquid, ignored, are starting to move, particularly have some good drill results. And there are a lot of good drill results out there that people just haven't been looking at. But the stocks are illiquid, and all the selling appears to have been finished. And when you want to come into it, you start moving it quickly. The seniors have been receiving a lot of money, and the ETF, the gold ETFs, are starting to accumulate quite a few funds, almost getting back to the levels. They're probably 15% off where they were and the highs in 2011.
Wow. So if you're an investor, and it's obviously trickier, how do you play gold? Is the equities the way to go? Or, I mean, like you said, the senior guys, but the junior guys probably is where all the lift will be. How do you pick them?
Well, it's going to depend on everyone's level of risk. I'm probably a bit of an anomaly that I'll put a large amount of money into gold, and I do. I own a large amount of gold bullion and have interests in a number of companies over and above McEwen Mining. So it's not a 5% allocation or a 10% allocation. I'm probably closer to an 80% allocation in gold of my resources. But say you're a conservative investor, you might say, I want to be exposed to gold, but I want an income stream. You'd probably go after a royalty company or a streaming company. I don't think they'll do as well in a strong bull market because the equity markets will come out and finance the juniors, the intermediates, and the seniors. Right now, the money is either going into selective juniors that are either being picked off by seniors, or they've got some really good drill results, or it's the seniors. And the intermediates, there are a couple of intermediates moving, but they haven't moved as much. So where would you go? I'd say to start looking at some of the mid and the juniors. And if you want to do some research, look at the explorers.
Roughly 88-90 to 1 ratio here, gold to silver. You favor silver here? Or?
Well, I think silver is going to perform quite well. There's a fairly high correlation between when gold moves, silver moves. And silver there's a huge exchange ratio right now, better than 80 to 1. I think it's almost 90 to 1. That can compress to 30 to 1. So silver could outperform gold by a significant margin. So you want to be in both, in case you're wrong.
Yeah, there you go. Let's get to your opportunity here, MUX. What's going on over there?
Lots going on.
Tell me.
Okay, I'll start off. What differentiates us? Insider ownership. I have an investment of $164 million in the company. That's my cost base. I own 22% of the company. I take $1 a year, so I'm only going to make money the same way my shareholders do. And I've elected not to take any bonus or any options. So that's one. We're diversified by metal. We have gold and silver production, 80% gold, 20% silver. We also have a large copper deposit, about 30 billion pounds, which gives us optionality to the electrification of transportation. Our balance sheet is, we have good liquidity in it to cover off our current commitments. I mean, if we were to go buy something else or do some M&A, we'd probably have to come back to the market. We have a very large exploration program going on, and had a large one last year in Nevada and on Timmins, Ontario, Canada. And we're pulling out some pretty nice results. And we'll be putting out news releases throughout the year. And they'll be dealing with exploration results, they'll be dealing with resource upgrades, they'll be dealing with feasibility studies. And our copper project, we're hoping we can find a joint venture partner that'll give us a chunk of money and then carry us on through production with an interest.
Before I let you go here, I have to get a forecast on gold because you're Rob McEwen and that's what we do. But pull out the crystal ball, and how's this going to end up for us here year end? We're at a nice level here now. I imagine we're probably at a point where we need to hold.
Governments around the world are going to start reflating. I mean, quantitative easing put the market into a bit of a tailspin. We're near full employment. We're a lot of people. Inflation's low, which is a little odd. Year-end seasonality, metals will be improving. So where are we going to be from here? We're at 14 and change. Could we get to 17, 1800? I think longer term, though, there's a $5,000 number, and if I looked at the past cycles from 1970 to 80, there was a 20x move in the price of gold from 40 to 800, and then you had from 2001 to 2011, you had a 7.5 times move. If you applied that to the low of 2015 of 1,050, you get some pretty spectacular numbers. You're at 7.5 on that is just under $8,000. 20x is $21,000. I mean, that's a long way off, but we've seen unprecedented monetary expansion. Interest rates are low. In some cases, there's over $11 trillion in negative government debt around the world, carrying a negative interest rate. And I find that really bizarre that you lend your money to somebody and they give you back less and you'd be happy 10 years later. But that's what people are doing. You've got this inverted yield curve, which is usually a precursor to a slowdown in the economy. And we've got this everything bubble. We had the dot-com bubble, and then we had the real estate bubble, and now everything you look at, contemporary art, the stock market, real estate, has gone crazy. And I think somewhere in the not-too-distant future, we're going to run out of steam. There are not going to be as many buyers that can finance it, and it's going to turn down. And we've seen money coming into the ETFs. We've seen central banks buying. Russia now, 18% of their foreign reserves is gold. They've been just pushing it up.
And not to interrupt you, but 2018, more gold purchased by central banks than ever.
Yes. So they're saying something's happening in the currency market. The dollar was supreme. There's a question of trust. Is this going to continue? And I'd say a number of central banks are saying, okay, I'm going to sell some of my dollars and I'm going to buy some gold. Maybe I'll sell some of my euros too, but they're getting out of their currencies and getting into physical.
Yeah, tricky question here, but U.S. dollar, argue what it's lost since 1913. 98%, I think, is a good number that I've heard. The best house, bad neighborhood, I get the dollar, but the dollar's running right now with gold. Explain that to me.
Yeah. Well, a very small portion of the total money invested in the world is in gold. So there's a large part of the world that is seeing the market in America running, and they want to be part of that game. There are a few that are starting to say, I want to be in gold. I mean, you take Ray Dalio coming out recently. Well, not that recent. Last August, he was a bull on gold, and he's becoming more forceful that way. George Soros. There are other people speaking to that you should have some gold. It's a good diversifier in your portfolio, and it might actually make you money, but it'll protect your portfolio.
Well, there you have it. That's Rob McEwen, McEwen Mining. Rob, appreciate the update and the time.
My pleasure. Thank you very much, Rob.